We're live.
Okay, well, hey, thank you very much.
Hands
Thank you
together,
very
guys.
much.
Put your hands together. Welcome to Tony Keith speaking.
Wow. You can leave now if you want, broski. And just like that, he's gone. Okie dokie. So, if you can check the live stream for us quickly, make sure we are all good. And if we are, we will begin
Yeah,
the shenanigans. Okay.
I need to check if it's
Yeah.
sound is all good.
Yeah. Make sure we are all good. And if we are, we will begin. Okay. This is the first time using Riverside. So hopefully all of this works nice and smoothly. Dom, is it looking smooth?
Yeah.
It's looking smooth. Okay, so as of now, the technically speaking episodes will be done through this Riverside platform, making it a slightly more gated community because our members deserve that. And we actually have a producer now who's going to be helping to produce the show, making sure that it's all at tip top, tip top quality. So massive shout outs to our producer, Mark. Okay, cool. So I'm going to share my screen now. Boom. So you should be able to now see my trading view screen. Dom, if you can just double check that we can see the trading view screen clearly on the YouTube. And what we're going to be doing is we're going to just be reviewing the different sectors and where they're at and how they're performing. Yep, that's all good on the audio side. So let's have a look. See. So first things first, I want to start looking at the energy sector. The reason I want to look at the energy sector is because what most people don't realize is the energy sector is probably the easiest way of indicating where we are at recession wise, pretty much. Just simply because when the energy markets explode or have a massive uptick, that's not normally that great for the markets in general, as we saw from the 2004 to 2008 period. And then they came down. And then, as we saw in 2020 as well, massive drop, massive spike. So let's just see here. Where are we at? We are close to all-time high levels. Not quite, but getting there. So we'll mark that in as red, as a red zone. So we want to sell energy stocks if they start getting to this level. Personally, July Bitcoin announcement, tech and crypto takeoff. So this was written quite a while back. I should have dated it. So we're going to delete that now because it's not been dated. So let's get rid of this. That can all go. Okay, cool. So overall, again, we want to start looking at this on a macro view. So this is the monthly view of the energy markets, right? We did have a high RSI, but the markets didn't actually come down from there. They came down a little bit, the energy sector, but now we can see we've got a nice trend that's forming just along here, like so. But then you could say that there's a bit of a wedge just here. So these wedges, they normally break out to the upside or to the downside. This one, I would probably most likely say would break out to the downside. But we've got this moving average here on the monthly, just supporting it. But if we go to the 3 month, we can see that that trend is even more beautiful. And is suggesting it's more likely to break to the downside on energy stocks. Cool. So that's that. So let's go to the other indicator that would suggest that we are in a bit of a decline, and that is consumer discretionary. Now, why is consumer discretionary important? Because it basically means it's at the discretion of the consumer to buy it. So it doesn't mean it's products that they don't actually need, right? So again, we're looking here on the macro view of things. When consumer discretionary got to a crazy all-time high in 18, Obviously, then it did a pullback, and then it did even more bigger pullback in lockdown. Why did stocks have a massive pullback in lockdown? Consumer discretionary. Oh yeah, because people didn't need, just decided to stop buying things that they didn't need. But then it spiked up because people were getting free money. So people buying a lot of things that they didn't need. So that happened. So we can see there was on the 3 month there is this wedge here, but we seem to have popped above it, which would be good for consumer discretionary stocks. I'm sure we just paid for the upgrade. The consumer discretionary stocks. This is your things like your LVMH, things like Nike, um, just anything you can think of that somebody doesn't actually need. Like they're not gonna die without it. It's not gonna affect their life that much if they don't have it, right? That's what goes in here in the XLY. So if we go down on the weekly, there's no 10-20 cross, nothing like that. It's just some crazy momentum here on these candles. You can see the movements being quite big. On the daily, we do have a 10-20 cross, and we do have a low RSI, and we do have this Bolly pop out. So again, from here, if you spotted this in August 2024, you would have seen that maybe in the next couple of weeks, we're potentially bullish. I would say now from here, the last 1, 2, 3, well, last couple of days would have been bullish. These last 3 days now are suggesting even more bullish signs for consumer discretionary, which would probably suggest that maybe, you know, the next set of earnings should be really, really good from these consumer discretionary stocks. Um, if we're looking at things from that angle, but let's
It
just
is
see.
coming up to Christmas.
And it is coming up to Christmas, so those numbers should start to do well anyway. So let's now go and look at the other recession indicator, which is obviously real estate. So again, we'll do the usual process. We'll go and take the big macro view first. So again, in my opinion, a lot of people would say that real estate is the place to look for sign of a recession in full play. However, this time around, I would say it's not, because I would say that unless you're looking at big REITs in this, so that's a real estate investment trust, that's a stock that is public that invests in real estate. Unless you're looking into ones that are in commercial real estate, what's commercial real estate? That is real estate that is in buying business buildings and offices. That is where this problem is. This problem isn't in residential homes, because people still be buying them, because people always need somewhere to live. However, right now, I'm going to pose the audience a very logical question. Do people need an office? So, yep. Yeah. Hmm. Exactly that. I'm just going to stop sharing a second because I'm going to upgrade this, even though I'm sure I did just upgrade this. Trading view, trying to get that extra noise. A second. Definitely did just upgrade
It
this.
takes a while for it to go through. He did it just now.
I reckon that's what it is.
Yeah.
It's pretty annoying.
Mm-hmm.
Okay. We'll deal with the ads just for this episode. Okay, let's go back to the chart. Okay, so we're back to it. Okay, so what we're seeing in real estate is we do actually have a 10-20 crossover on the monthly. We had, which is quite interesting there. Are we anywhere near an all-time high? No, not really. So there is a bit of space for that momentum to bubble up to the top there on the monthly. On the daily, what do we have? We have a really nice trend line there on that. Very, very nice. So then I guess we're looking for is which of these sectors is actually on a decline, because they can't all be on an incline, right? So where are we? So I would say energy was on a bit of a decline. If we look on, let's not look on the daily though. Let's look on the weekly. That gives us a bit more of a clearer view. So I would say energy is in a decline, and I think that's safe to say that we've just had the 1020 cross there. I think that's safe to say. So shorting of energy stocks, we'll go to which ones in a bit. Bullish on technology stocks still. Consumer discretionary, bullish. Financials, bullish. Communication services, I think this is due to pull back. If we look at it, yeah, I communication services wise, I think this is due to pull back just because things that we used to communicate in 2020 are not the things that we use to communicate now. They're just not. Like a lot of people now on WhatsApp and Telegram, those are the only forms of communication that we use. Like cell phone companies, we only need the mobile data now. And if you can get Wi-Fi everywhere, you don't need your mobile data. In fact, a lot of the time when I go on holiday, I don't use mobile data. I'm quite happy to survive on just the Wi-Fi. So I think we're getting ever increasingly into that kind of world. We can see it's had its fair run. It's had a little bit of its cycle from this low in 22 up to where we are now. Almost 100% move for the entire sector. Yeah, I just don't think, just like how a lot of, remember how like how radio got hit up when TV came in, and then how TV got hit by digital and social media. I think the same thing's going to happen to traditional ways of comms. Right? Yeah, it's. I think there's an intentional push to move comms to satellites. Yep, yep. And then if you've got Starlink, it's very difficult to take down the entire network. Whereas with cell, with like traditional cell, is quite easy. So industrials again, we can see that there's a bit of a double top, but it's peaked out above that. So industrials are due a bit of a pullback, but we haven't seen that yet. Real estate we already looked at is seeming to be very, very bullish, and it's got a long way to all-time highs, unless this is a downtrend. This one right here. It could be, but who knows? Let's zoom out and see if it looks like it is. Oh, you see, if in doubt, zoom out. It's an interesting one, but let's see. XLU, which is the utility sector. Again, let's look at that on the weekly. Looks quite steady. Looks like it's been steady for a while. Yeah, this has just been a very steady eddy for literally almost 15 years. As we can see, this trend just here. People got bills to pay. Obviously that one spike out here in 23, August 23, actually. Don't know why that caused that, but very interesting. Oh, that would have been the war, probably. Then the health sector, which for me is always a shame that the health sector isn't bigger than the technology sector. But I think that's a matter of time. I think some of the things that we're seeing with Ozempic, that we're going to see with CRISPR, I think the health sector is going to fuse with the tech sector and is going to be bigger than a lot of them. So this was your time to buy into the health sector. As you can see, that window is kind of gone. That would have been October 23. Would I be buying into the health sector now? No, not really. I think it's clearly way too high. I think it's due a bit of a pullback. So I think maybe the health sector is another one to look at for shorting. XLB materials, again, kind of, I think this one's a bit clearer that there's a bit of a resistance going on here. Struggling to get past. So materials is one to look at for shorting. On that, let's look at it on the monthly. Look at it on the 3-month. Yeah. I think that's a bit of a clear resistance there. Then lastly on these consumer staples. Now this is all your stuff from like Unilever. This is all the stuff that people actually need. So we can see there was a clear resistance here, but it broke above it. And now it's back at smash that resistance as well. Your low was here. Amazing buying time in 23. September, October 23. And now that's just been bullish ever since. Pretty high RSI here. Again, I'm going to flag this. So, Mark, if you can write these down. So, ones we want to look at are consumer staples. Cool. Cool. So, I'll read them out and you just say if we're bullish on them or bearish on them. Or maybe even write it in the chat. Okay, so I'm just going to read out the different sectors and then say if it's bullish or bearish. And then we're going to try and find individual stocks in those things. So let's start off with XLK technology. Bullish. Next is XLE energy. That is bearish. Yep. Next is XLY consumer discretionary. That is bullish. Next is XLF financials. Question mark on that one. XLC. Yep. XLC communications. Bearish. XLI industrials. Question mark on that one as well. No comment. Yeah, no comment on that one. Yeah, neither bullish or bearish. XLRE real estate. I am bearish until we get over 43.5, until we get up to $45 on XLRE. But otherwise, I'm quite bearish. Yeah. But at the moment, it's looking like it's going to decline it. In fact, so much so, I want to take a picture of this one. Oh, that one's finished. That one's completely finished. That's going to require a big government bailout. They're going to have to turn them into residentials. I think whether you like foreigners or not, you're going to have them in your country to keep your country going. That applies to every country. And whether you like foreigners or not, if this global warming thing is real, you might end up getting some foreigners from some countries you didn't expect, like New York. A slight environmental problem. But let's see if it's okay to have a load of New Yorkers in London as refugees. Be an interesting situation, right? I don't think you'll get loads of New Yorkers willing to do delivery or be taxi drivers or run your local corner shops or be doctors or be nurses. But we'll see. We'll see what happens. You never know. Next is XLV, healthcare. Uh, it's got good momentum, but I just think that might be running out of steam. I think that might do a little pullback. So XLV healthcare, I'm gonna go say I'm bearish. Same with XLU, bearish. And then it was XLB materials V for healthcare, yeah. And then XLB, which is XLB materials bearish. If we get above the 92, above this big resistance that's there, maybe a different story. But otherwise, yeah. In fact, let me mark that one in as well. Okay, and then we have XLP, which has smashed that resistance, consumer staples, and it's just charging, absolutely charging. But the question is, how long can it charge for? But we'll see. RSI have 73 on this one, and that's on the weekly. I think last time we had that was December 21 and 2013. Okay, so let's look at the additional sectors. So SMH, which is the chips sector. So all the chips. It doesn't seem to have any dips, but it's had a dip recently. This is probably one of the only dips that you was going to get on the chip sector. And look at that beautiful support line there. Oh my gosh. Oh, beautiful. Taiwan. And no, I think it was a scare factor to get people to not buy. But I don't think it's a risk factor. This is now hit this support. Look at that. Beautiful. That's a 3-month candle, that. I mean, should we try a bit of a crazy thing to do? A fib on the 3-month candles? I mean, that's a bit of a wild macro thing to do, but you know, let's say that was it there. No. Let's say, let's not even go with that one. Let's go with, let me redo this one. Let me do this instead. Let me do it from the last impulse, the last clear one. So that would have been here to here and then down to here. Okay, boom. You can see we hit that very nicely. Nah, smashed all these. Okay, so that I'm not too sure is too accurate. Let's have a look on the weekly. On the weekly, it did respect this as a base, but it didn't respect it as a resistance. Yeah, I think that fib is wrong there. Let me do it here on this weekly. Okay. Let's do it from, actually, let's do it from the retracement. Close, not hella accurate, but very close. But we want crazy accuracy, right? That's what we want. So no on that. Let's go extension. Ah, actually, hang on a minute. What if the retrace was from here? No, still not. Okay, so let's go extension. If we go here, go here, go here. Now that's a little bit better. There we go. Look at that. So hit the 702 almost perfectly, pulled back to the 0.5, bounced up to 270 and peaked above, came back down, and now we're off again. So I would say this is good. I've got one fib here that I seem to have done before, but I would say to 360. And then we've got one crazy ass fib all the way up here at 633 on the chips. So chips, I'm bullish. Very bullish. The one that we called a while back, a good while back, and it should be getting some momentum anytime soon, is cybersecurity. We called this because I don't know why this didn't stay. We called this when we saw this support here. 1, 2, 3 bounces, shook everybody out, got rid of everyone's positions, and now bang. And now, boom, we've had all these hacks, we've had everything. Cybersecurity for me is a big, big, big one. And then we've got TAN, which is solar energy, which has been absolutely destroyed. Nobody is interested in solar energy in the world right now, apparently. Exactly. Why would no one be interested in solar energy right now? Why would solar energy stocks all of a sudden be worthless?
Because people want to make profit, and all these private oil companies don't care about sustainable.
Or maybe the private energy companies want the prices to go down so that they can own all the solar companies.
All that, yeah.
But if you ask me, this looks beautiful. This beautiful trend. Look, I mean, how many touches do you want on this trend line? 1, 2, 3. And then we got this beautiful support just here. It's not as clean, but it's a support nonetheless. You've had your low RSI since around October 23. I think, in my opinion, this looks like an accumulation zone to me. Right here. So we are going to be bullish on solar energy to break out by February 25. February/March 25. We'll get a breakout on solar. I wonder who's got a big desert. Is there any countries that you think might have big deserts that the majority of their money is made from oil, which is a limited resource? Yeah, same. And they're building like a whole like giant line that might all be powered by solar energy, perhaps. I don't know. I don't know. I don't know. Yeah, I thought so. So this might be a 4x on solar energy, 3 to 4x in the solar energy space. So yeah, let's start off with looking at what stocks are in TAN. If it lets us see, it's going to show us. Actually, let's see what the analysts say about TAN. To buy, to buy, to buy, to buy, to buy. Only 5% of it is held in the Middle Eastern stocks. Very interesting. That would be very interesting. So top 10 holdings: Enphase Energy, First Solar, Sunrun, Next Tracker, GCL Technologies. These are all the big players. So in your own time, do your own research on those. I think we have to do an episode on these. In fact, let me just and the top 10 weight on these is crazy. The top 10 in these makes up 59% of the entire holdings. That is crazy. Okay, let's screenshot that one. Cool. So that's that. And then cybersecurity. Let's have a look and do the same. 6.8 billion. Infosys, Broadcom, Palo Alto, CrowdStrike, they're there. Cloudflare, Zscaler. Again, might want to have a look at these top 10 in a separate episode. Cool. So now we want to look at those sectors, but we want to look at them, the main holds in them. So which ones were we bullish on? Which ones were we bearish on? So, Mark, you got that written down? Cool. So if you shout out the sectors that we were bearish on. Mm-hmm. That's right. Oh, well, I found one to short already. Here we go. Coca-Cola Consolidated is way too high right now. Yeah, that's just ridiculous right now. So write this down in your notepad. Short on Coca-Cola. Yeah, don't know. It might get up to 1374, but even from where it is now, it's screaming. The RSI is screaming at 83. Yeah. To short it to um, to at least 1140, but ideally, now my target price to short it down to would be 818 and $700. Yeah, between 800 and $700. That'd be nice. And one of them was communications, definitely. Okay, so communications have already started dipping. So Google's already started dipping. Uh, T-Mobile is looking a bit frothy. 77. Yeah, that's Activision Blizzard. Mm, okay, so Honeywell, Crown Castle, it's in real estate. Oh, that has got battered. Oh, Crown Castle looking good though. That's a dividend play as well. Hang on a minute. Very nice on Crown Castle. You got all the usual plays, low RSI, bounces along support, 1020 cross, and bullish on Crown Castle. Yeah. It's a REIT. They have all the cell towers. Yeah, they buy cell towers. So I'm bullish that they will probably. I've been saying for ages that they would do something with Helium, the Solana blockchain, but they haven't yet. But yeah, this looks nice to me. Yep, they are. Yeah, this is very interesting. This one. Okay, let me screenshot this one as well. Cool. Why have all my sectors disappeared here? That's really annoying. Consumer discretionary, no. Tech. I think tech's pulled back enough right now. That pullback on Nvidia was crazy. Don't think you're gonna get that again anytime soon. Energy. Was I saying a short on energy? So good. Oh, really nice resistance there on Exxon. Bearish on healthcare. So your big three there. Let me add a section. Why is it doing this? Oh, it's got rid of it because of my plan. Okay, fair enough. So your big three there are United Health, Johnson and Johnson, Pfizer, and AbbVie. What's crazy is how madly shorted Pfizer has got. Crazy. Yeah, when you pull this back, what this company's done, it is unbelievable. So lockdown, it did from the bottom to the top. Oh, I only did 100%. Yeah, it wasn't actually that great of an investment. Oh, they would have been finished. Yeah, very interesting. Well, it's in the dirt at the moment, looking like it could go lower. Well, no, there's actually a support level here, a bit of one. Oh, actually, no, there's a really clear one. Actually, hang on a minute. Yeah, really clear support on Pfizer. Actually, mm, yeah, potential 100% move there on that one on Pfizer. Yep, potential 100% move there on Pfizer. To see what happens on that one. Keep an eye on it. I am on the healthcare sector, but this TA is saying otherwise. Yeah. If it drops below 25, it's going down to like 5. Yeah, it's going to at least 10. 5. Oh, XLE, so energy. So that'll be Exxon and Chevron. If we look at them on the 3 months, there's a bit of a descending wedge happening here. Yeah, very clear descending wedge now that I look at it. Yeah, on the 3 month, that looks, yeah, you can see it even clearer now on the monthly, right? Although this might actually be a wedge to the upside, to be fair, now that I look at it. Yeah, let's very interesting for Chevron at the moment. Very interesting. Yeah, let's see how this plays out. Just because of the shape of this wedge here, it could go either way, Chevron. The big macro saying it's going to come down, but the monthly is saying, oh no, wait, no. The weekly is saying that it's going to break down through this. So yeah, if Chevron goes below 138, that's a big short. And then that would then rotate into the solar, which would make sense. Chevron is the oil company. Oof. No, not individually. No, they're mainly American ones. No, that's a nice big uptrend there as well. Yeah, so that's those. Yeah, I think I've given quite a few to look at for people there in terms of the sectors. Yeah. Go do your own homework. That's what I'd say. But the one that is standing out to me is Coke. This is just unhealthy right now. Let's go and have a look at its performance. Let's go see if its earnings have been killing it. Revenue 1.6 billion. Oh no, they've had a massive margins increase. I don't know what they did manufacturing wise, but margin went from 4% margin to 10% margin. Yeah, that's like a net income jump of 100 million. Yeah, that's very good for them. Very, very good for them. Yeah, they did nice there. Yeah, you have to bear in mind people pile into Coca-Cola when they're uncertain of the rest of the markets. It's just like a safety play. If there's a war or like just general uncertainty, Coca-Cola is seen as like your safe bet. But they have had good earnings, so fair enough. Absolutely fair enough. Yeah, fair play. Fair play to them. What is really annoying? It's not bringing up the analyst rating anymore. It used to bring up the analyst price, but it appears it's not there. Oh well. Anyway, that is a wrap. Thank you very much, everybody. See you later. Yeah, I'm gonna. Hey, no, that was a dojo slash technically speaking combined in one. So yeah, tomorrow I've got the individual calls whereby any of the dojo members I'll be going over any of their stock picks and yeah, yep, I will be going over that tomorrow. That's all for tomorrow. Perfect. No worries, guys. See you later. Bye bye bye.